What's going on, guys? What's going on, everyone? How we doing today? Market not really doing anything today, considering what we've been doing. A little bit more of a consolidation day. Really wouldn't call this a dead cat bounce, even though markets are green for the most part, 50 points, not really nothing. But we're still well below yesterday's high, well above yesterday's low. Nice, congratulations. Sweet. So a little bit more of a consolidation today. We're going to have to kind of see, is the market going to kind of shake off a little bit of some of the headlines and some of the news and stuff like that and start maybe trying to inch its way back up to somewhat normalcy, or do we still have another leg down? Personally, I think there's one more leg down to come, but again, who am I? What's up, Hurst? Who am I, right? I just a guy with an opinion. So if I look at my daily chart on the left hand side of the screen, this gray box in between these two purple dotted lines is where I think that this market can kind of finish before a bigger leg up. Now, I would love to see the market just completely turn around from here, but this would kind of take us into a stronger correction, 20+%, where that recovery can be fast, can be swift, and if played right, you could definitely make a lot of money on the upside. But we'll see, right? Because on the daily chart, this sell cycle really started once we confirmed losing the 50 SMA back on February the 20th, 21st, and then we had it, essentially almost about a month worth of price action, realistically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, a better half, almost 3 weeks here of just pretty much straight selling, right? No real day has closed above a previous day high, which tells me that we have not yet to see a dead cat bounce. And in any correction, any pullback, you always get a dead cat bounce, right? So pullback, dead cat bounce, consolidate, failure to break highs or maybe wick above the highs, and then collapse is what you would be looking for. And then the next target would be down there into, somewhere between 16 and 18,000, right? And then that could potentially start a V-shaped recovery, which I think would be the stronger move. It would last longer, but if the market decides to go from here, we got a lot of work to do. Basically need to get back over this 200 simple moving average first, right? I mean, there's, we're still sell-sided bias here until we at least start closing over a previous day high and reclaiming this 200-day moving average. But today's, for the most part, we're looking at the 1 minute time frame on the right hand side of the screen. And right now we're kind of trading, at and around the 20 SMA. We're just a little bit above the 50 and the 200 on the 1 minute. So, we've kind of had a little bit of a bottoming out here closer to the first hour of the market open. And that's it, right? That's it. Getting ready to kind of go into lunchtime here. So, if I was to look at the chart today, what did the market do? Well, we sold off a little bit. We kind of tried to recover, and now we're back in the middle. Kind of a little bit of a hard price action to read in terms of what would I really be looking for going into lunch if we do get a reversal of the move. Typically, if we're selling off very aggressively before lunch, I'll look for some consolidation, maybe a dead cat bounce to the long side until after lunch, and vice versa. If the market was pushing up, I'll look for some consolidation and maybe a pullback in lunch. But with today's price action pretty much split 50-50, If I just look at the bigger time frame, the daily chart, it's an inside bar day. We swept yesterday's lows and now the market's trying to hang on. So definitely today's lows is going to be marked out on the chart. That's the way down here, 19,140. So if we do lose that area, I'm going to expect that next target to be down in towards 18,000. Now, again, does it have to get there in one day? No, but that's going to be what I'm going to be expecting. So just playing accordingly. Again, I am a day trader, so it really doesn't matter which way the market is going, but for the overall sentiment, I guess, I would like to see the market start to recover here and us to shake off some of this news. Again, you know, what's it really going to take? I think we need to see something related to a rate cut. And I think once that happens, that's when the market's really going to start to scream towards all-time highs and above and beyond. Until then, I think we're going to have a little bit of trouble. I could be wrong. Let's just focus on the day to day. So if I was to look at the 1 minute time frame right now and kind of mark out, you know, maybe we have a little bit of a flag pattern setting up here. Is it the best flag pattern? You know, is it something that I'm in love with? No, not really. You know, I don't really love anything to the long side here. I won't really be too interested in trying to even take scalps to the long side. You know, I will take it. I will take the long scalps, but I'm not like that enthused, right? Until we at least show that maybe we're going to dead cat bounce. And what that would require me to see is for us to take out a previous day high. So the soonest I would be a little bit more long biased on these setups that I see would be tomorrow. If we take out today's highs, then I've got some interest there. Everything today to the long side, I'm going to have to just treat a little bit more cautious, to be honest. Don't really want to give it too much room. I think that I'll have to probably size down. Now, again, I'm locked out of 3 accounts here on the day in profit. So we're switching over into another account that hasn't been traded today. So we've got, you know, a 0 balance on that account for today. So, you know, I could afford to take a loss here and there or a couple wins here and there, and we'll kind of see how it plays out. How is everyone else doing out there today? We find the markets difficult to trade today. Was it easy to trade today? Are we pretty much done today? I don't think anyone can determine whether anyone's strategy is profitable or not. I think that as long as you're comfortable with it and it works for you, go for it. That's always going to be a problem. That's always going to be a problem if you're trading on the smaller time frames. And again, you know, I don't know what your risk to reward ratio is if you're running a little bit of a negative risk to reward ratio, but you know, I mean, I have that same problem as well. A lot of times my problem would be that I have a little bit of a negative risk to reward ratio, so the win rate's a lot higher. The only thing I have to really focus on is when I do take a few or a couple winning trades, I gotta stop, right? Because I always know, you know, this is probabilities. I'm gonna run into a losing trade. Do I want to give back everything or go into the red? Probably not. So let's just lock up a smaller green day versus trying to reach for the stars and then give everything back. So, you know, I mean, It doesn't matter. Scalping, day trading, swing trading, investing, it all comes down to the person, to the trader. So anyone can operate any strategy and become really good at it if that's your sole focus and that's what you're becoming good at. So again, I don't knock anyone's strategies. I mean, I've got guys that trade with me who use, extremely large size, looking for, 6 to 8 ticks, but they're trading 10 contracts, right? And they're using a 1-to-1 risk to reward ratio. Sounds impossible. Works for some people. Does it work for me? Not so much. Can I dabble and can I play in that sandbox a little bit if I wanted to? Sure. Can I do it on a day in and day out basis? No, it's not. It doesn't fit my personality. But what else we got here? Super Choppy took a trade at 9-10 short. That was the only trade. Yeah, I mean, of course, like we have, like, if anyone loves the longs, right? If you love longs today, or you love longs in the last week, there's something off about you as a trader, and that's no disrespect, but the daily chart's bearish. We're in a correction. We're down over 10%, closer to 12, almost 13%. There's a lot of headlines. There's a lot of catalysts. There's a lot of uncertainty in the markets. Why would we be excited to jump the longs, right? Again, I'll play in that sandbox, but I'm not going to give that dog too much leash, right? I'm going to keep it, tight to my hip. And if it starts to go off course, I've got to like negate that plan or those trades, because everything is getting sold, right? So any pop, regardless if it lasts a minute, whether it lasts an hour, whether it lasts 20 minutes, it's getting sold. And the reason being, we're underneath supply. So we've lost a lot of demand, macro wise. And anytime you get a pop, like for example, look at my 1 hour chart on the left-hand side of the screen. We kind of had a little bit of a slow grind up, right? Which I did not prefer. I would rather the overnight session have sold off today, and we wake up, or we get to the New York session and we're down 2-3%. I want to see us down 250, 300, 400. That would create a spring to trap early shorts and then go, red to green type of move. When you gap up in a downtrending market, it's going to get sold. I don't care what anyone says. It's going to get sold. So you're underneath the supply. And if you look at the, where we kind of got rejected, we got rejected at this linear regression channel. We can't get over this regression channel. Like it's just trapped, right? So we're getting beat up at hourly supply. We would need to reclaim 19,568 before this market even has a shot, right? Before it has a shot. I'm not saying to go back all the way to the highs. I'm just saying has a shot for some decent continuation. And that might give us about 100 points to 150 points. There's levels, and we keep approaching these levels and we knock our head against the wall and we can't get through. Just the buyers don't have any confidence right now. I blew an eval, but a bit torn on Twitter. Yeah, it's a little bit of a tougher day. At least it was an eval, and it's not like a funded account that was due for payout this week, right? It's just an eval. We can get more of them. They're $33 right now. With Apex, a lot of other firms have deep discounts as well. So it's a little bit, it happens. It happens. I lost an eval yesterday trying to do stupid stuff. I went try to catch a bounce. I thought, I could be cute and fancy and let me catch this bounce. Let me put on a little bit bigger size. And the market yesterday didn't bounce, but the setup was there, right? On a smaller time frame, just no follow through. It is what it is. I'm still focused on a lot of hour candles, because these hour candles are kind of giving us good sense of direction, right? So the way I'm looking at this chart, I might look for entries on a 1 minute. I might look for entries on a 5 minute, but I want it to be going in the direction of what my macro candle is doing. So if I'm looking at these hourly candles, well, I can see that I'm being rejected. I was rejected here at hourly supply, here at hourly supply, here at hourly supply. So the pressure is still down, even though we're getting these little pops and we're getting these, little waves to the upside. There's not a whole lot. Like, we don't know when they're going to pull the market down, right? So imagine if, if you were just solely looking at the 1 minute time frame and you're like, okay, we kind of put in a floor and we've reclaimed this 200 SMA. I can get long somewhere in this area, and sure, you're expecting this breakout to kind of just continue, and then it pulls back, and then you're like, oh, okay, it's just a little bit more consolidation, and then it pulls back some more, and now you're in the deep red, if not stopped out, or you blew your account or whatever. But realistically, should I be going long right into supply on a 1 hour chart? Probably not, right? But it also doesn't look super good like I should just get short right now either, right? So for me, like, I have no problem sitting on my hands. If I don't get something that I love, well, I'm not going to take the setup. I don't care if it's a 20 SMA play. For those of you guys who, play 20 SMA plays, I show a lot of those strategy setups on YouTube a lot. I don't care if it's a 20 SMA. I don't care if, whatever the setup is. If I don't like it at that particular time it's setting up and it doesn't look good based on my bigger, higher time frames, I'm not going to take it. I'm just going to let it go, right? And even if it works out, great, more power to whoever took it. But I'm not going to put myself in a situation where I'm going to be upset or pissed off that, well, I kind of knew I shouldn't have taken this trade, but I wanted to take it anyways, and I got bored. And, again, because it happens to me a lot, especially with, when I'm sitting around and trying to find setups, maybe put ideas out there for people to kind of, draw attention to, or I'm just sitting here doing chart work, or I'm sitting here doing back end stuff. I can always find a setup. That's the thing. We can always find a setup, right? Finding a setup is not hard to do. You will definitely find a setup the longer you sit here. Whether that setup is legit and gonna work out, well, we don't know. A little bit of a flag breakout here. And that's a pretty good trade. I'm going to take some cash off that. I played 2 micros on that, and I think we locked up about $92. Not bad. And that's another thing too, guys. You can sit here and you can kind of play this price action, even though it's not the cleanest. You can play a couple micros. It'll allow you to withstand a little bit of the chop. It'll allow you to withstand a little bit of the, the ups and downs and the bigger ranges. And then maybe, you can get it to kind of go in your favor as long as you're like semi on the right side of that short-term trend. You should be okay in terms of either A, you're going to make profit, or if it doesn't really work out, you can stop yourself out without a big loss. Like, the way I always try to look at it is, okay, imagine if I took that trade through that little flag breakdown there with, let's say, 2 or 3 mini contracts. And let's say, it wicked me in and I got into the trade. And it went in my favor a couple of points, and then it screamed back, 10, 12, 15 points. Well, now I'm going to be down $500, $600, $700. That's going to put so much pressure on me mentally to either A, it's going to cause me to go deer in headlights mode where I'm going to hold that particular trade because I want it to come back in my favor. I just entered the trade. It's not working. I want to hold it. Technically, I know I shouldn't be holding it because of the drawdown is already so big, right? That's just because I'm over leveraged. And then the second thing, it will cause you to maybe get stopped out of a move that could still run in your favor maybe 5 minutes down the road, but you had to get out because you were over leveraged, right? So playing these micros, even if it snaps back on you, 10, 15 points, you're only going to be down $30 a micro. What's the worst case scenario? You're down $100, right? Okay, cool. So if you don't feel comfortable with being down $100, you can exit the trade, and it's a paper cut. You can recover, right? It's not the end of the world. Because there's really no rush, right? There's really no rush. It's, the prop firms, they really make it feel like there's a rush because there's certain time constraints that we have to, try to fit into. There's certain profit targets we need to make. Maybe mentally we put ourselves in a situation where we feel like we've been working at this for so long and we just want this all to pay off. But the market doesn't know that. The market doesn't care. So, the market's not going anywhere tomorrow. So turned out to be a nice little breakdown. You got the breakdown through this flag, you got the retest, and then you got some continuation. Now, and this is a perfect example how, let's say someone took this flag breakdown, you didn't sell for any profits, and then let's say it went against you. This range was about 25 points. Let's say it went against you 15, 17, 18 points and you got stopped out. Guess what? You just missed out on a beautiful move because you're over leveraged. So size down a little bit so you can at least see the trade through. If anyone can take anything away from any of my videos, from any of my live streams, from any of my whatever, it's just size down and give yourself a shot. That's it. Just give yourself a shot. Don't feel like you're in such a rush. Because what's the alternative? You're in the same place you are right now in 30 days, in 60 days, in 90 days. There's a lot of people that, continuously keep reloading evaluations and funded accounts, and they keep blowing them. And they keep blowing them. They blow them and they blow them because they're trying to go too fast. Versus if you just went slower and you just traded less size, you're probably going to pass those accounts, if not be in a pretty good spot to pass them after 30 days. What's the alternative? You're back in the same spot you were before. Right? So I don't know about you, but in 30 days, I would rather take out $1,000 from a prop firm than put in $200, $300, $400, $500 in evaluation fees, right? By the way, because I know you guys need them, some of you, Apex 80% off, you can use code D'Anthony, right? Show me a little love. But I want to get to a point where you guys aren't buying evaluations like daily, weekly, monthly. Like, we should be able to hold them a little bit longer. You buy a batch of 10 or whatever, maybe you lose a couple along the way, but you get some funded, you get some payouts, and now we can actually start rolling profits into our business, right? Instead of just putting in like fresh capital. Like, we don't want to, that's the whole goal. We don't want to put fresh capital non-stop into our business. We want our business to self-sustain itself, and in order to self-sustain itself, we need to get some payouts. It's going to take, an upfront investment, just like any business will. But once you kind of get rolling, it should start to self-automate itself, Also, guys, make sure you guys are smashing the like button either on your way in or on your way out. I would appreciate it. So right now what I'm kind of looking at is on this rejection here of this 20 SMA on a 1 hour chart, pressure is down. We definitely have room to kind of come back down into the bottom of this range where 2 times we have held as support. Longer you hold something as support, the more times you test it, the greater the odds are that it's finally going to crack through. If we do start to crack through previous hour low and we get through low of day, you know, you've got a Bollinger Band that's going to obviously expand with price, but that's sitting down here at 19,236. That's about 100 points down. And if the market wants to get aggressive, I mean, well, then we could start taking out, you know, this overnight Asian session, London session low, right? 19,139. You know, if we start getting below that, you know, kind of look out, right? Again, I do have a bigger target down here in this gray box that I definitely think that, you know, we could be visiting in the near future, but again, we'll have to see how that plays out. I would definitely be watching the previous hour low though. So if I was to put that on the chart so we can kind of see what that looks like, that'd be right about there. All right, and I can actually drag it. Be right there. So previous hour low could also act as an area of support. It could turn into, you know, a double bottom where you kind of graze this area, meaning you sweep it and then you reclaim it and then you bounce from here. Or you can sweep this area, back test, and then confirm. I definitely would be looking for the break, retest, and then go before I entered in short off that level. I'm not really a big fan of entering, especially on the higher time frames, of entering in on the first breaks. I want it to break, at least give me a candle or two closing below that, and then I want to confirm that new low price, and then I'll kind of jump in with that momentum and see if there's any juice left in that tank. And that's kind of how I play the bigger time frames. Be real curious to see if this wants to back test all the way up into 390s again. That's about 20 points away. If it does, I would look for a little bit of rejection there in that area. You have a little bit of a flag pattern here.
An evening of hits with the 13-time Grammy Award winner, Babyface. Friday, March 14th at Yamava Theater. Tickets on sale now at yamavatheater.com or the casino box office. Babyface live.
see if this wants to continue to act as resistance. So on the right hand side, we're looking at a 1 minute, and then the left hand side, we are looking at the hourly chart. Hourly chart's been getting rejected here. We got a little bit of resistance, but we're trying to see if we can form a little bit of a base, maybe. Again, I got a target down here at 19,286 if we do start to confirm this structure here. Yeah, definitely lower stress. I mean, play some flags, you know, play those micros. You're gonna have a lot less stress. That's all you're trying to do right now. We're just trying to survive. That's all we're trying to do. We're just trying to survive these times until we get to better days, you know? That's it. I'm still looking at resistance both not only on a 1 minute chart, but also the hourly chart at 435, guys. That's a good 1 minute 20 SMA play there. I didn't take it, but it worked out pretty well. Again, I don't have, like I mentioned kind of in the beginning, I don't have a whole lot of conviction in the buyers today. They haven't really proven anything to me. So I'm just being a little bit more cautious these days. You know, if they want to continue to bounce, great, more power to them. But they still got a lot more to prove to me before I feel like this market is anywhere strong enough to trust, you know, taking, you know, 70, 80, 90% of the long setups. I'm willing to let a few go. Yeah, 1 hour is on the left. I'm on a 5-minute now on the right. The right hand side of the screen, I will be switching different time frames, but on the left hand side of the screen, it will always be the 1 hour. You actually have a nice little looking 5-minute flag pattern here. 2 touch points there. Again, I think if we break that, you know, you've got a lot of structure all in this area here. When I mean structure, you know, I'm just talking about, you know, we sold off a little bit, we consolidated, and then we put in a pop, right? Like, you got price action in that area. You have, you know, this zone right here is acting as support. You know, buyers were, you know, for the short term being, they were comfortable kind of creating a little bit of a floor here to kind of push up, and now we've back tested that. So maybe as we come closer to getting out of lunch, you could maybe see a continuation to the upside. See if we want to try to dead cat bounce this move into tomorrow. If not, you're going to get a lot of resistance in this area here, and then it's going to break down. And when it breaks down, it's probably going to back test, and then it's going to come back down into this range. And obviously, if you lose these lows, well, you have more room to go. Right? So always just prepare yourself for both sides of a trade. And, you know, don't overcommit to either side, especially on a day like today where essentially we've gone nowhere, right? A little up, a little down, a little up, a little down. Do we continue to ride this wave out? Yet to be determined. Your hourly chart still looks like shit. You know, like there's nothing going on over here other than the fact that we tried to get over those pre-market highs, those overnight highs, and we were just rudely rejected. We're back on a 1 minute now on the right hand side. We still have a pretty big ATR here on a 1 minute time frame. We're looking at around 25 points. So again, for all my 1 minute players out there, you know, we've gone over it a couple of times in evolution that, you know, the guys who are really scalping the 1 minute time frame, and I've noticed it as well, we tend to have a little bit more trouble when the ATR is over 20. And it's just due to the fact that on sometimes you get wicked into particular setups and it pulls back 10, 12, 15, 18, 19, 20 points, and it can still work out, but it's that heat, right? So you're going to have to, my opinion, if you see an ATR between 20 and 30, you're probably not going to want to trade minis unless your take profit is like super small. Okay, now I'm not saying that you have to have a 24 point, 20 point stop loss. That's not what I'm saying. Let's say you do have a 10 point stop loss and you're looking for, 5 to 10 points profit. There's probably a higher chance that you're going to get stopped out of trades a little bit more just due to the fact that the ATR is higher. Okay. One thing that you can do is maybe size down into micros and give yourself the 25 points worth of wiggle room, and still look for the same take profit, but as it's going in your favor, maybe you can kind of adjust that stop loss as it starts to move in your favor. But just starting off right off the rip, let's say, I'll just give you an example. Let's say I had a beautiful setup right now and I wanted to go long, and it pulls back 18 points on me and I got a 15 point stop loss. Well, I'm going to get stopped out and the move can still continue to go in my favor. Because again, why? Well, the ATR is telling you that right now we're in a range where these particular candles can go back and forth over 20 points, right? So it's just a note. It's just something that I've realized, is that on 1 minute setups, if ATR is over 20, it's a little bit more difficult. Either I have to size down or I have to open my stop loss. So right here and right now, we're kind of testing this 1 minute supply zone. I've got resistance sitting at 419. Let's call it 420 to 430. I've got some resistance in this area. Again, that resistance is just going to be the 50 SMA and the 200 SMA, which are pretty strong moving averages on any time frame that you're looking at. So I would expect us to have a little bit of trouble here. Also, we're approaching hourly supply as well. We've been rejected here a couple hours in a row. So I would look for some resistance in this area. It'd be really good if the bulls could break through this. They could close over these areas and kind of confirm that move after lunch, kind of signifying that the low of day is in. That would give us a little bit more to kind of work with going into tomorrow versus, some type of late end of day sell off. Then if that's the case, I would expect lower prices tomorrow. I'm definitely interested in maybe later on in the day, a breakdown through 19,285. that would have my attention. Here's the test of that 200 SMA, guys. If you have been kind of riding this and grinding it higher, this is your area where you want to definitely secure some profits, and if not, move your stop loss to break even, but put it into profit at this point in time, and just essentially make it a free trade, right? If the market wants to continue to grind higher all day, great, you're just going to continue to ride that move. But we're not going to allow this to come back and stop us out at break even. We want to make sure that we're at least locking in something here, and then a runner as well in profit.
Hi, here's your report.
Oh, thanks, Jane.
Look at how stiff that rejection was, guys, right here in this area. Right there off those 430s, that 200 moving average, we definitely got stuffed there pretty good on that first attempt. Now, again, we did backtest support. It could definitely consolidate in this range between 390, 430, consolidate, and then choose to break out, or it can come all the way back down here, and we're still gonna respect this trend line here.
I wish I could hide. Hire a whole team of yous.
Try posting a job on LinkedIn.
One minute 20 SMA play, also testing this flag. I would like to see the flag get broken and then kind of put in one more candle as a bounce, or confirm the low through the flag. I haven't been a fan of taking flags on the first attempt, like that first crack through. I want it to crack through and then confirm, and I've been having a little bit more success with that. It just kind of prevents me, because of the range is so big, it prevents me from getting wicked in and having this, you know, bounce 20 points before it goes back down again. I'd rather just allow it to do its thing the first time and take that second entry. So maybe if it starts to lose 19,371. There's a loss through 71s, guys. Let's see if this actually wants to hold through and not just spike up. So in a situation like this, your risk has to be at least the previous 1 minute candle high, which is all the way up here at 88. So automatically off the bat, you're looking at a almost 20-point stop loss in a situation like this, right? Where you're kind of in this drawdown period right here. It's chopping around. It's really not doing anything. You're going to have to kind of make a decision. Either this is going to need to go here and now within the next 1 to 2 candles, or you're going to have to stop yourself out once you do close back over that flag. And especially if you start taking out, you know, 88s, because if it doesn't, it's going to come right back up here to 96, and then it can come all the way up here to 400 and start to test. So this is that sloppy period where a lot of times we get into these trades and they wick in our favor and they go back, and it's kind of like that uneasy feeling. Now that we're back down below, I would want to think about taking profits on this sweep down here, guys. I'd be taking profits here and now. That's me. Again, I'm not a financial advisor, but that's me. I would take profits here. But that's a perfect situation. How that setup is beautiful. We kind of had it marked out, right? I think we all kind of, you know, if you glanced at my chart, we all kind of seen we had that level there. We had the 20 SMA play. It kind of broke through, and, you know, taking it on that second entry, it still put us into drawdown. But it's like that feeling of like, oh man, I just took a trade and it's not working. It's not that the trade's not working. It's just you, my friend, are uncomfortable with the size that you entered into that trade with, because you're not able to manage those like ups and downs. And it's like for one person to say, because I hear this a lot, and it's kind of frustrating at times, because people are saying, well, I only want to risk 10 points. I only want to risk X amount of points. Okay, that's fine. But why do you want to risk that amount of points? Well, because I don't want to lose any more than $200. You ever think about sizing down so we can allow the trade to actually work out technically, instead of just putting a fictitious number on in our heads because we heard from some bozo on the internet that if you're looking for 10 points worth of gains, you need to have a 10-point stop loss, right? Which I think is bullshit. You manage your size, or you manage your risk with your size, not with a fictitious number of, hey, you know, like, I just want to lose 200 so I can only lose 10 points. And that's foolish. It's foolish. You know, because what you're playing is technical patterns, right? I think we can all agree on that. You're playing a technical pattern. So you need to make sure that technically, one, the trade is still intact, which means that it's not over the trend line that you took. It's not over the previous 1 minute candle. It's just in a little bit of drawdown. As I speak, look at the bounce on this son of a gun. Jeez. I mean, that was a, from absolute low, that was about a 60-point pop in 2 minutes. Absolutely insane. And that's why I was kind of saying, hey guys, you know, this is a spot where I would kind of take profits, because again, we're not really below the previous hour channel, right? So if we're not below this lower channel, we can't go lower. That's a fact. You can move down, sure, but you're not going lower. I hope that makes sense. So it's like when you're taking these patterns, and you're taking these patterns on a 1 minute time frame, you're not looking to rob the bank. You're looking to come in through the back door and be slipped a couple $100. That's what you're looking for, right? And just as fast as it went up, it's coming right back down. Again, inverse hammer candle, we're still being rejected. You can see here clearly, right? Clearly, even if you don't play moving averages, I know like this is like outdated, right? So many people, like there's so many bozos that have come onto my video as of recently. I think because we're like in a correction, and when the markets are going down, people are just more angry. But there's been a couple bozos like, oh, you know, this guy learns how to, you know, put a moving average on his chart, and now all of a sudden he can call tops and bottoms. It's not that. I've been playing this shit for 13 years. Go back to my videos. I've been putting videos on YouTube for the better half of 5 years. I've always played the same way. But yes, moving averages, a little old school, I get it, but they fucking work. Like, you know, just respect them, and it's just another form of supply and demand. So the same way that people, you know, they draw on, you know, their order blocks, or they draw on areas of supply and demand, or they draw, you know, whatever, right? Areas of resistance. It's the same thing. I'm just not manually plotting this stuff on there. Adjusting the flag line a little bit up on the right side, you would get a retest. Let's see if we adjust it on the right hand side. You're saying which way? Retest from below the second last count. Here, like right there. You're saying. Is that what you're saying? Which would make sense, right? It would make sense. We have these declining moving averages as well that are going to act as areas of resistance. So it's all kind of matching up. I think that's what you were talking about. I do something like that. Again, and also, guys, your flag patterns are all subjective, right? Because I had a conversation with someone a couple of weeks ago, and they said, well, the flag patterns look good in hindsight. You know, they look, yes, maybe you made money trading it this time, but it's all subjective to the way you're drawing it. Like, let me give you an example. Who's to say that we couldn't have done like a flag like this, right? Like, I don't know. Someone could have done something like that, right? And then it's like it wicked down, you got into the trade and it stopped you out, or it wicked down, and but it's like they are subjective, you know. It's I just say like this, just use common sense, right? Like, just use common sense. I try to look for at least 2 to 3 touch points, right? So I got 1 touch point, 2 touch points, okay, you know, 3 touch points if I slightly adjust this. Okay, now let's rock with this. Let's just drag it out and let's see where that wants to go, right? And if I was to draw it like that, well, then we get our breakdown here exactly where we lost our 20 SMA, and then look at the retest, and then look at the rejection on this candle here. We spiked through it, never closed above it, and then fell right back down. So they are subjective, but I'm here to tell you guys, there's no right or wrong way to do any of this stuff. So whether you're looking at flags, whether you're playing moving averages, I know there's a lot of people who play bounces off of moving averages, rejections off of moving averages. For example, here was a bounce, here's a rejection at the 200 SMA, good. Stop loss goes above the 200 SMA, you get short. I don't necessarily play moving averages that way, but that's not a wrong way to play them. It's all dependent on the way that you see the market. So how you're seeing the market has to make sense. I can easily do something like this as well, right? Now that we've put in this new low, I can do something like this. Now, is this the best looking flag pattern? Is this even a flag pattern? Not really. But you can have someone that says, well, okay, I know we put in a bottom here, we bounced, we put in a bottom here. So maybe if this trend line gets broken, and maybe if it gets confirmed, you might have a trade. Now, how do we take those trades? Well, the only way to kind of take them is you got to analyze the risk. How much do you want to put on the table? How much are you willing to see this play out, right? What are you willing to bet on it? Again, this is a bad example. This is not a flag. This is just like a double bottom, but you get the picture, right? I'm going to take this crap off because now it's just starting to confuse me. But you know what I'm saying? So it's all a big smorgasbord, right? Of buyers and sellers. Where do we see buyers positioning themselves? Well, based on this, we can see buyers positioning themselves here. Now, what happens if all of these sellers clean up all these buyers? We're probably going to go lower, right? Great. Can we find a setup off that? How much size can we put on? What are we going to use as a stop loss? Is our stop loss mechanical or is our stop loss dynamic, right? You go through the lines. And what you get is someone who's trading price action, right? Like, there's no right or wrong way to trade price action. For every setup that you may take that I don't take, you might win on it. I might take the same setup and lose on it. Maybe you had a smaller take profit. Maybe you had a bigger stop loss, right? So it's all subjective, but there's a few things in there that correlate and correspond with each other. Okay, so again, don't get too hung up on it. What I've realized is that the more I get hung up on something needing to be picture perfect, the more it confuses me, because the more I'm waiting for added confirmation when I could have already made money on it. The more I'm waiting for, oh, well, I remember last time it bounced and I just held it a little longer and it came back. Like you're putting too many things in your head. Trading's very simple, guys. You're going to win or you're going to lose. The difference between a profitable trader, I hate that word, profitable trader. The difference between someone who's able to extract money from the markets, whether it be via prop firm or personal brokerage, and put money in your pockets, in your bank account, the only difference between that person and someone who can't do it is the person who can extract money has found a way that works for them and they're comfortable with it and they can manage risk. That's it. Like, they can manage risk, because it's a fact that you're going to lose trades. 100%, 1000%. Now, again, there was another smartass. Been a lot of smartasses on YouTube lately. There was another smartass this week that said, oh, beautiful cherry pick on that 20 SMA play. Beautiful cherry pick. Well, that's right. I'm going to pick the best. I am going to pick the best setup. So, for example, for that, jackass, I'm going to make another video today, and I'm going to pull this 20 SMA play, and I'm going to pull this 20 SMA play, and I'm going to highlight these, and I'm going to make a video of it. Because I want to show you what it looks like in picture perfect mode. Now, there's also scenarios where they don't work. But I think that's obvious though, right? I think that's obvious that not every setup's going to work. Like, so for example, look at this 20 SMA play to the long side. Uh-oh, you're wicked in and you're down 17 points now. Might need to take a stop loss here. If your stop loss might have gotten triggered, right? So here's a loser. So every play doesn't work, right? That's a loser. Every play doesn't work. But also, how could we maybe avoid that? Well, maybe, the trend is down. We're consolidating. We haven't taken out the 200 SMA. Maybe we should just stick to the downside until we've proven that we've broken this downtrend. I mean, that might be one way to escape potential loss. Again, even this flag here, it's setting up a 1 minute 20. Does it have to work? Does it have to come down here? No, we don't know that, right? So there's your entry. And what you're banking on is that you're going to be able to collect profits before it stops you out. There's your profits. Take your money. That's your 1 minute 20 play. So here's another picture perfect one. Boom, money. Here, smiley face. Jackass on YouTube with the stupid comments. So do you see how that works, guys? For every play that loses, there's going to be a picture perfect one, right? Here's a picture perfect one. Here's a picture perfect one, right? And then remember the example I gave 3 minutes ago, guys? So this is not a flag, but someone could have drawn this double bottom and they could say, oh man, if we break this double bottom, right, what's going to happen? Maybe we come lower. Maybe we come lower, right? I don't know. I mean, I'm not a fucking magician, right? But maybe we go lower. So it's all about your comfortability, Sure, if someone's taking these little breakdowns and you're a scalper and you're taking 5 points, 10 points, you're just cashing, right? You're cashing here. You're cashing here. You're cashing here, right? But to the guy who's looking to get in on, let's say, oh, here we go, here's another one, and guess what? I think we're gonna break the 200 and we're gonna run. Guess what? You just got smoked. Now, how could you avoid that? Well, I guess you really can't if you took that trade. There's no way to avoid this big fat loser. But what you can tell yourself is, okay, what's the most potential loss I'm gonna take? The previous 1 minute candle is 19 points. So even if I have a 20 point stop loss, I'm going to lose $40 for every micro contract that I trade. So if I trade 2, I'm going to lose $80. Okay, I'll risk $80 to see this play out. As soon as you get in, as soon as it's stopping you out, right? So you're down $80. It is what it is, right? It is what it is. There's no way to avoid that. The only way you can avoid that is by telling yourself the trend is down, so I'm going to avoid those longs until I see myself break this downward structure. And that would require a break over this 200, a backtest, consolidate, and hold. Then I could maybe start looking for the longs. I hope that makes sense. But to all of the keyboard warriors and the billionaire traders who watch YouTubers strategy videos. You know, if they were so profitable, they wouldn't be watching videos. But to all those people that think that, you know, that you only, you know, are never going to take a losing trade is ridiculous, right? But like me, I'm a simple guy. Like, I want to make things simple. Either I can identify something and it works or it loses. That way I can just quickly move on to the next thing to see if it wins or loses. But I just want to keep my position size in check to be able to withstand the losses along the way. I think any strategy, you know, based over like a series of 100 trades, you can run into a spell of 4 to 5 losing trades in a row. So I would recommend, you know, your position size, you need to be able to withstand 5 losing trades in a row. Out of a series of 100 trades, there's a high probability that you might lose 5 trades in a row. I don't care about the strategy. I don't care. You can give me any strategy. Someone says, well, not this strategy. Not if you know how to play the X's and O's and Q's and penguins. I don't really care. Any strategy has the potential to lose over 100 trades, has a potential to lose 4 to 5 trades in a row. So if your max pain is, let's say, $300 and you lose 5 trades in a row, you're going to be net down $1,500. Okay. So if you're net down $1,500, do you still have an account? Right? Now, if you're going to be on the verge of losing an account at $1,500 down, maybe you've got to have, you know, a risk of, let's say, $200 max, right? $200 max. And again, the idea from the opening of this live stream, what was I waiting for? I'm waiting for this. I'm waiting for this guy right here. Previous hour count to get broken. That's what we're waiting for. So it is what it is. It's just a game of numbers, guys. You got to take a lot of trades. You got to play a lot of trades. Would you rather refine your craft over 100 trades or over 3 trades? What do you think's probably better to learn? Taking 100 trades or taking 3 trades? Like, how are you really going to learn about yourself in 3 trades, right? And the reason why I say that is because many of you guys jump into, you know, 1, 2, 3 mini contracts and you're taking $700 losses and your account is blown after 2 or 3, 4 trades. Hell, after 1 trade. You're not really learning anything. And then you're repeating the process again. So instead, why not just take your time and actually see if your system and your model and your adjustments are actually profitable after 100 trades. Like, if you take 100 trades and you only make $600, you only make $500, I don't care. You know what that tells me? For every 100 trades we take, we're gonna net positive $500. I just need to scale this out, baby. That's it. Just scale it out. Whether I'm scaling that times 20 accounts or whether I'm scaling that out times 1,000 trades, I don't really care. Doesn't really matter. But I think everyone wants to, they want to make $3,000 in 3 trades, and it's kind of like, you're gonna do it sometimes, but the majority of the time you're gonna hit a losing trade before you get there. It's easy to win a trade. The odds of you winning 2 trades is possible. The outcome of 4, 5, 6 winners in a row is almost probably damn near impossible. And psychologically, what happens is you win 1 trade, you win 2 trades, you lose a trade. Okay, you're okay. You lose another trade and you fly off the radar. You fly off the rails. No, I was up $500 and now I'm down $100. No. And then everything just spirals after that. Because you were never really set up to have success off of that model. You didn't have enough drawdown. You didn't have a big enough account. And that we're just flagging out now, crazy. Like, I mean, again, if you really wanted to get super technical with them, I mean, you could add a flag pattern here. You got another flag pattern here. You're kind of just staircasing your way down, right? Look at the staircase. Drop, pop, consolidate, drop, pop, flush. We're kind of just doing the same pattern here. So this is like a staircase. Top layer, another layer, another layer. What I'm really focused on is this over here, this hour setup. Look at how close we are to now. Now we're in a fresh hour, right? Yeah, lunch is over. We've got 2 hours of back-to-back tests there. If this starts to get confirmed here, you know, for sure I say we at least back test that wick there. Here we go, guys. I would want to see this get broken first. I want to see this level get broken. What I don't want to see is I don't want to see it break and go down 50 points. You know, just give me a nice little wick there and then back test and then take it out. And then I want to see something like that. Let's see. You know, we've been waiting for it, so let's see. I guess the bigger question is, the bigger question is, do we close below yesterday's low? That's the bigger question. This is a daily chart. Do we close below yesterday's low? What do you guys think? You guys tired of the selling yet? You guys don't mind it? You haven't even thought about it yet because you just scalp? Do you guys mind the selling? I mean, obviously, if you've got a long-term portfolio or 401k or IRA or something, I mean, you're probably not too happy, but do you guys mind the selling? I personally hate correction markets. I hate bear markets. I could trade them. It's not that I don't know how to trade them. I just don't like it. They just irritate me. It just irritates me. I like growth. I like growth. I like positivity. I think everyone does, you know, but I mean, there's some people who really love, you know, bear markets. They love corrections. They love the market's overinflated. Things are overvalued. It needs to come down. It's like, whoa, relax, you know? Relax. We're gonna be okay. But I like when everyone makes money to the upside. We're breaking this area now, guys. 286 is getting broken here. So there's my break. I want to see that get confirmed. I want to see that get confirmed. Let's see this get confirmed. So you can do whatever you want to do. You want to bounce up here. You want to stay below that little swing high. You want to stay below that 20 SMA. That's fine. I want to see you break down through here. You know, is it going to work out? Is it going to just wick below and then bounce back? I don't know, but we broke. Now we're bouncing. I want to see it break down. At this point, my Bollinger Band on the downside is really opening up to the downside. All right, guys, we're in this trade here. We're in this trade here. I don't want to see it snap back too much. What's my ATR? ATR is 23. Not what I wanted to see. Not a hammer candle is what I wanted to see. Patience here. A little patience here. Not gonna do it. Currently down about 7 or 8 points here. Back to flat, back to break even here. I want to see it go on this attempt here. We broke it once, we've confirmed it. I need to see it go here. Really holding us up here. Nope, I'm out. Didn't work. Did not work, and I still think that this is going to come lower, but I'm not gonna be a bettor to see if it's going to go through. I'm not going to sit in that down 20-30 points. We're just gonna take a loss there on that. So now what I got is a sweep of the prior 2 hours worth of lows. We still have resistance here at 320-ish. Would it be worth it to go here once more? We'll have to see. I also have no problem. I have no problem entering back into a trade if it's showing weakness still. We'll have to see here. Here's a little bit of a test here at this resistance.
Hi, here's your report.
Thanks, Jane. I wish I could.
Still getting hung up here. I'm still interested. I'm still interested below these lows here, below 278. %60? No. Who told you that we're going to dump 60%? Your worst bear markets are 35%. We're not dumping 60%. That's preposterous. I would definitely start dollar cost averaging in, but we've got another area too. We do have another area that we can come down to, but it's not 60%. That's crazy. And that's not just me, you know, being bullish or anything. That's fucking crazy. 35% max. If that. I mean, 60% from all-time highs would be like a fucking Great Depression. There's a lot of overreaction going on right now with the markets. Uncertainty, yes. Overreaction, absolutely. The moment good headlines start coming across the board, this will get eaten up faster than you can blink your eyes. Nice work there, Dave. I just seen your post. Nice work. Need to see us stay below 300. Kind of forming a little bit of a rounding bottom, no? A little bit of a rounding bottom. We'll see if that holds up. At this point here, I would be very shocked if they didn't test the low of day. I'd be very shocked if they didn't test the low of day. You know? Let's see if it wants to go this time. Getting these little wicks, and then they're just really setting up traps. Be very, very cautious here with these shorts. If you are trying to short this, they're setting a lot of traps here, which might result in like a 20 to 40 point bounce in one candle. If they really don't break this down here, I would say within the next 60 to 90 seconds, you're probably going to see a 30 point bounce. which looks like that could be the case here. We have low of day sitting at 264. What do you think? Out of lunch reversal here? Out of lunch reversal for 100 points? That's what someone said. Guys, I flipped my bias. I'm in the long here. Got in over 300, 301 to be exact. Might just take this fucking profit. Really watching this right now. We're up 15 points here. 18 points. 350 on 1 mini. Really watching it right now, guys. I don't want to pull back too much. 1 minute 20 play here. We do have room to kind of come into 343. See if we take out this next candle here and we kind of shoot back up towards those 30s and 40s. Getting tripped up here. One minute 20 play setting up here to the short side. We're getting rejected on a 5-minute time frame. We're getting also rejected at our 5 SMA, which is our power trend. We can't get a close over that. We just keep getting rejected at it. I would assume if this can reclaim a 5-minute 5 SMA, you might be looking for that reversal, but until it does that, the pressure is still going to be down. I can still see them taking out 72s and going for low of day. If it doesn't close over this 5 SMA. There's that low of day test there, guys. There's that low of day test there. And now a new low of day for today. Bollinger Band sitting down here at 200. Continued weakness here in these markets. Buyers cannot hold a bid. That has been pretty evident. And I don't think there's really any reason for them to hold a bid yet, right? We haven't gotten any type of clarity, any type of anything showing that the buyers have a reason to start this bounce. And now that I look at it, we got to look at the daily, right? Let's look at this daily. So yet again, another day where we failed to take out a previous day's high and we put in a new low through the prior day's channel, right? Because even in a situation like this, where let's say, for example, towards the end of day, it starts to rally, right? Because again, a lot of times you'll see that towards that last hour, you might get a rally. That's not a rally of, hey, the selling is done, the sellers are gone. It's a rally of profit taking from short sellers throughout the day, right? And that's why you get those, 50, 80, 100 point bounces at the end of the day. But the damage has been done for today. So when I say, damage has been done, well, we've taken out the prior day's channel to the downside. That's pretty evident. We got nowhere near testing yesterday's high, right? So the sell cycle is still on. And again, I'm going to take off some of these lines because they're just irrelevant now. I want to drag this across, actually. Let's do that, and let's do this. I think my price target's going to come into play here, which is this zone down here. Between these two, it doesn't, I don't see a reason why we wouldn't. I mean, look at, for some of you guys who don't, you guys don't have the moving averages and stuff on your chart. I get it. It's a messy looking chart, but there's nothing here. It's very, very hard to call a bottom because there's nothing here. There's no support, right? You have to go all the way back. So the only reason I'm coming up with these zones down here is if I go to a weekly chart, right? If I go to a weekly chart, we're actually down at the lower linear regression now. If we start to close below this linear regression on a weekly, this uptrend is going to flip to a downtrend, which is not really what the bulls want to see. They're going to be in a lot of trouble. But this 18,000 area is between our 100 SMA and our, what is this? 100 SMA, 100 EMA. And then I've got our 200 SMA weekly way down here at 15,700. But this is not what the bulls want to see at all. I mean, this is going to be I'm just saying, guys, this is a prime opportunity now for the bulls to really step in. If they don't, this is going to flip to a downtrend, and we will be going into a bear market. If you thought this selling is bad, you thought it was hard to trade now, just wait till we get into a full bear market. Because the shitty part about bear markets, you're going to have one day where you're down 300 points and the next day you're going to be up 180, and then the next day after that you're down 400, and then the next day after that you're bouncing 200. But meanwhile, what you're doing is you're staircasing down and just grinding lower because you're not really taking out any prior day channels. And that's hard. You might get 2 days of back-to-back 350 point losers, and then the next day, you're down overall 700 points, and the next day you rally 380 points, and it's like, oh, the selling is over, and the next day you're down 200. That's what becomes tricky. This market has been relatively easy the last 3 weeks because the majority of your big moves are just flushes. It's just washout after washout, right? So that's, relatively easy. But if you start getting down into this zone down here, which I firmly believe are probably going to come down at least into 18,000. If you get down into this zone, you're going to be hit every day where you don't know which way the market's going. And that's difficult to do because the volatility will still be up and the ranges will still be wide. So it's going to be extremely hard to manage and navigate. The only thing that I'm keep going back to is because the selling is so severe, like that's so violent every day, literally. It reminds me of exactly, almost to the T, and we'd have to go back in the chart and look, but the end of February to literally about the first week of April, this reminds me of the COVID 2020 crash. Now, in those days, we had some big breakers that got triggered, some big greater than 5% drops, but overall we just dropped, and then boom, it was like one day the selling stopped, that money printer went on, stimulus checks were going to start rolling out, and then the market V-shaped recovered, and we actually finished up like 20 something percent on the year. That's what this kind of reminds me of. Because it almost feels like they are driving this market down with an absolute purpose to get a specific outcome. And I believe it's getting those rate cuts. Because again, you got to think about it. We got $9.2 trillion that needs to get refied worth of debt. And I just don't see them doing that at 6%, 7%, or whatever the hell it is, right? 4% on a 10-year bond. I don't see them doing that, right? And the only way to get what they need is these tariffs keep putting strain, keep putting pressure on the Fed to cut these effing rates. That way they can get this money printer back on and start working on the plans that they actually want to work on. You know what I'm saying? So again, I mean, that's a lot of like macro talk. And again, for us as a scalper, it really doesn't matter. But I mean, I'm interested in it because, I got long-term portfolios, guys. I mean, I got stuff that's, fucking down 20%, 30% haircuts off the top. And, it pisses me off. So I'm trying to think, where's the best spots that I want a dollar cost average at? I added a little bit of some names at the 200, and I think now I'm gonna probably do my last aggressiveness down in this range. So I have this range marked out. I'm gonna do some very aggressive buying down in this range. And guess what? If I don't get to this range, fine. Better for me, right? Better for me. I can just keep my money in my pocket and I don't have to get down and dirty in this area. And then hopefully we just rally from here. But you get some sweep of this area, and then you get like, maybe 1 or 2 weeks of inside barness. And then we kind of do something like this where maybe it looks like we're going to break down double bottom, and then we kind of push up, right? And then we can start coming out of this, towards July, August, start pushing those highs, hopefully sooner. But when I draw it out, any which way I draw it, and again, I know I'm just using a freehand, but any which way I draw it, it doesn't look right. Right? I mean, I just feel like that's too steep. Like, imagine if the chart looked like that, right? This pattern that I drew, it doesn't look right. And again, this is just bullshitting around, but like, I can see this. Something like that. It's gotta create something. And again, look at that drawing. I had no intentions of doing it, but that would create an inverse head and shoulders with a neckline being here. Huh. So how fast do they want to get us down? Get me down there fast. Get me down there in the month of March. That's all I'm asking. Just get me down there in the month of March. So mid to end of April and in May, we can start this recovery. That way, every day when I check my port, at least I'm making money and I'm not losing. It's like every day now, it's just going down, 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 down. So I'm trying to make more money day trading to get ready to load up more money down here. That's my opinion. And again, if we lose this area, oh my gosh, look out. I don't really know. That could be really, really bad. This could be like a drawn out, 12 to 18 month process, which I don't think that's going to happen. I think it's going to be quicker, 3 to 4 months, and we'll be recovered. I'm not saying, all time highs, but we will be recovering within the next 3 to 4 months. Like we'll be like somewhere like that. Like that. Hopefully. We'll see. We will see. But anyways, guys, that's it for me. I'm taking off. I'm done trading for the day. Did most of my work this morning. Hope you guys enjoyed the stream. Also, guys, make sure to hit the like button on the way out of here. And if you do need Apex accounts, it definitely does support the channel. They toss me like $2.50, full transparency, right? Anytime you put anyone's discount code in there, tosses them $2 to $3 or whatever, depending on the size of account you get. Definitely goes to support the channel. You can use code DAnthony with Apex. Also, like button is free of charge. So for everyone listening, free of charge to smash the like button. I will see all of you guys on the next one.